Welcome back. Continuing to follow breaking news after President Trump and First Lady Melania announced that they have tested positive for COVID-19, and they began the quarantine process last night.
They certainly did. The president's doctor says Mr. Trump is well at this time. He will remain at the White House, and he expects him to be able to carry out his duties as president. However, some planned travels, though, certainly have been canceled, obviously. The announcement came just hours after top White House aide Hope Hicks started showing symptoms, coming down with symptoms, and she tested positive for COVID-19, and then that's when they tested the president and First Lady.
The president was talking on Hannity last night on Fox News Channel about that, and immediately after the news broke, Dow futures fell more than 350 points. So the stock market just opened about 8 minutes ago.
That's right. We've been following that for you, and joining us live by FaceTime with more on the economic impact is Jim Lineweaver, founder and CEO of Lineweaver Financial Group. Good morning, Jim. Thanks for being with us. Again, we had you here, and it was our pleasure last week. But talk about this and the effects that something like this, such big news, could have on our markets here this morning. What are you expecting?
Well, thanks for having me, and good morning. You know, when you're looking at any type of volatility that's going to come from an unknown, the market absolutely likes certainty, and whenever you throw out a curveball, you're going to get a knee-jerk reaction like this that you're seeing this morning. As a matter of fact, earlier, just a couple hours ago, the Dow futures were down almost 500 points. And now as we open up here, you know, it's only down, the market's down a couple hundred points. So any type of uncertainty, you're going to get added volatility.
Do you think people, once they kind of heard from the president's doctor about that he didn't have any symptoms right then, does that give reassurance once the market opens?
It did, and actually, I saw a correction in the futures contracts about 300 points. So that is, as more news becomes available, it might calm some people's nerves. But on the flip side of that, you know, unemployment, came in at 661,000 jobs that were created in September, but they were expecting 895,000. So that didn't help. But overall, the unemployment rate dipped below 8%, which is a little bit of a positive news. But it tells us that the recovery is slowing. So again, we're going to have some more headwind when it comes to the market.
Jim, how could this affect the markets globally?
Well, anything, you know, it's kind of ripple effect. So what occurs in the U.S., most times it causes a ripple effect all across the country. So we'll see how that unfolds later today and over the weekend. But if we can have some type of stability, if they can continue to report throughout the day how the president's doing, obviously he's in a risk class with his age that is not very favorable, but I'm sure he's going to get the best treatment possible in order to be able to stay healthy and recover hopefully quicker.
Any advice just for people who are in the markets that as they're looking at things, maybe been a little volatile right now?
Well, you really had to know. Remember, we put a report out back in August to all of our investors that said, you know, we are expecting a lot more volatility between now and the end of the year. So, and we're thinking that's going to be in about a 2,000 point trading range. But if there's any money that you need to live on, you should not have it in the market, you know, over the next 6 to 9 months. And if you're a long-term investor, you can stay the course, but it is going to be a stock picker's market. So when you get to volatility like this, when you have some companies that are doing extremely well, other companies that are closing their doors, you really have to have an financial advisor with you along the way to make sure that you can recognize and take advantage of those opportunities and hopefully not be sucked into the ones that are not going to do as well over the next 3 to 6 months.
Jim, before we let you go, talk about historically during these presidential election years. We are 1 month away right now from Election Day. Now you toss in this, but talk about historically, what do we usually see this time?
Well, the statistics would say if the market is up 3 months prior to the election, the incumbent will stay in about 75% of the time. Obviously, the debate was, not favorable for either candidate. However, we had a very strong August. We almost hit the all-time high of the market that we had back in February. September gave up almost 10%. And then in the last 10 days, because of the talks of a possible stimulus, we recovered about half of that. And so now with only giving up a couple hundred points, we'll see how the day ends. But right now, it's going to be anybody's guess because the market is not giving us the telltale sign or the clear sign of which way the election is going to go.
Jim, thanks so much. Appreciate you getting up with us and talking to us on short notice, too. I know you're going to be pretty busy today and for the rest of the week as well. Jim Lineweaver, founder and CEO of Lineweaver Financial Group. Jim, have a good weekend.
Thanks, Jim.
Thanks, you too.